Hey there, Vinny from Project Frugal. Another episode of Road to 100k. Getting closer. Let's go. And before we get into the video, just a quick disclaimer. I'm not a licensed financial advisor. Don't take this as financial advice. This is purely my own opinions and comments. Take it with a grain of salt. Cheers. Right, let's look into Denise's portfolio, 88,107.45. I don't believe that for a second. We'll find out why. We've put another $1,000 into the portfolio. Let's click on investments and see what's happened. So, yeah, well, in fact, yeah, 82,747 plus the money in the shares he's saved, which is well over $5,000 now. However, there's a couple of things to note here. We've got the Barramundi warrants, which we'll never take up these warrants, $23.87. But it gets worse because we've got the Fletcher Building Limited rights, and they're worth almost $500. Let's click on that, see what that says. You've received 205.9474 rights. You've got until the 4th of October if you want to exercise your rights into Fletcher Building shares. Find more about the offer. Suspicious. So Fletcher Building wants to raise $418 million New Zealand dollars worth of capital, which basically means they're going to chuck in more shares into the company and it's going to dilute the value of the shares. Yeah, that's quite a lot of money there. So if we do nothing, basically the shares are going to be worth less. Great. The other option is, because we do have shares, we are able to buy, by the looks of it, 205.94's worth at a reduced price. And if we go into the offer, let's click on find more about this offer, and we'll get a bit more detail there. And it does say offer price is $2.40, and it reflects a 17% discount to the NZX50 close price of $2.89 on the 20th of September 2024. And it's looking like you need to submit your rights by the 8th of October. So if we do submit our rights, by the sounds of it, we'll be able to buy 205 shares worth at $2.40 a piece. How much is that? $600 worth, roughly speaking, but the shares are going to be diluted in price pretty much straight away. Is it worth it? Well, they have made pretty substantial losses in recent times from what I've read. Will we do it? Probably. Well, who knows? Maybe we will. I don't know. Probably not. I don't know. Maybe. Ooh, it's tempting, isn't it? Hey, is it tempting? I don't know if it's tempting. Maybe we'll have to do some more digging and see if it's worth it, or maybe not worth it. I don't know. The choice is yours, just as the choice is ours. We'll go and have a look at the wallet. We've got nothing in there at the moment, and that's because we've put $1,000 in. When did we do that? Well, a couple of days ago now. Put $1,000 in. We have received some dividends. When was the last video? A couple of weeks ago. So since the last video, since our last $1,000, wherever that is, oh, it's way down here. Can't remember when the last video was done. I'm sure we probably discussed Stride Property. Maybe we didn't. I can't remember. But Somerset Group Holdings, $27. Heartland Group, $51. Meridian, $100. We transferred all that money from those dividends into the shares he saved, so we're earning currently 4.35%. It's down from historical highs of 4.6%, and that's because as interest rates lower, basically they're going to offer lower prices for the amount of money that you've got in the shares you save over time. So one day, who knows, maybe if interest rates go down to 1% or 2% or something like that, they might only be offering 0.5% or 1% or something pretty low. But we'll go with it. Doesn't matter. It's basically it's spare money doing something rather than just sitting in the wallet doing absolutely nothing. So while we're not buying, at least we are getting something back on the money. Even if it's $10 a month, doesn't really matter too much, eh? Anyway, let's see what else has happened here. So we've got those dividends paid out, and then we put the money into the shares we saved. We put another $1,000 in the other day, 3 days ago. That money went into the shares he saved, and then we got some more dividends. We've got $9.31 for Air New Zealand. That went into the shares he saved. Bit of a reoccurring theme, this one. And then finally today, we've been paid out for Marlin Global, Kingfish and Barramundi. Now, if you don't know what these three stocks are, Marlin Global is, all three of these are in fact run by Fisher Funds. Marlin Global, basically they have fund managers, and with Marlin Global they invest in world stocks pretty much. Kingfish, they do the same thing. They'll invest in a bunch of different stocks, basically the same stocks that we're pretty much buying now on the New Zealand market on the NZX. Kingfish is for New Zealand stocks, and Barramundi is basically for Australian stocks. So their fund managers will do lots of research and hopefully they'll pick good things. Unfortunately, over time, since we've had these, we've actually made a negative amount. But they will eventually go into profit. They were going quite good at the start, and then the whole market as a whole since post-COVID went down, and these went down with them, and they're sort of coming back. But they do pay out quarterly dividends, and that's probably why we like them. So today, $181.33 out of dividends on those three stocks. That's all gone on to Sharesies Save. So let's move on to the application. And what a day it's been. $900 negative. Brilliant. Almost $900. $896.93. Yeah, not a good day. Yesterday was a great day. We made probably about $1,500 between both portfolios. Today is pretty much the opposite. We've lost $1,500. We're pretty much break even on both portfolios. Oh, the old market, eh? It's very volatile, and it's probably going to remain volatile. So just when you think you're winning, you're up $900,000. The next day, splat. All turns to custom. Never mind. If we have a look down here, we've got some payouts coming in October, so we've got some dividend payout dates here. Fonterra Shareholders Fund. Now that did pay out a lot of money, and according to this, the expected payment is $485.77 based on $9,000 worth of shares. Is that true? It sounds a bit high to me. We'll just have to wait and see what happens roughly around the 10th of October and see how much we get paid out from that. Hey, if it was $485, I wouldn't be complaining about that, that's for sure. Anyway, that's what we've got in October. There's only 3 green ones here, so yeah, there'll be some other ones here. We've got Tourism Holdings, we've got, what else have we got? We've got Turner's Automotive, that suffered big today, negative 2.2%. Considering we've got $18,000 invested in Turner's, 2.2% going downhill is, I don't know how much that is, $400 and something negative. Not a good day for Turner's, or not a good day for this portfolio, but that's okay, because overall we've made $2,351 despite today's $400-ish loss on that stock. So overall, according to this, the portfolio is still up $742.40 because we're not including all those rights, all those other bells and whistles, taking away the fees and the interest and warrants and all that sort of thing. We're still up. So we're going with this number here, not the 88,108 we saw before on the actual Sharesies, the Sharesies wallet and all the rest of it on the Sharesies side. We're going with this number here, $87,575.36, representing a, on paper profit of $575.36. In the black, still in the black. Long may it continue. If today hadn't happened, hypothetically, if we added another $900 onto that, we would be up pretty much $1,500 on this portfolio. It has been going for almost 4 years. It's quite a long time. However, it is good to see that it's finally in the black regardless, because we don't want to get up to episode 100 and still be in the red. That wouldn't be a good look for this sort of channel, would it? Let's go and have a look at the payment months. We are into the end of September, so there's pretty much nothing else to come out. We have been paid out all of these now. Now that Kingfish, Marlin Global and Barramundi have paid out, we already got paid out for pretty much all the rest of these things here. I don't know about Fletcher's, I can't remember. Things go pretty quickly in this game. But October, yep, it's a busy month. We've got 8 different instruments that we're holding on the month of October, which should, in theory, pay out, and we'll be hoping for quite a bit of money. November's generally pretty quiet, and December is another good month. So looking forward to December, because everyone knows we'll get a break. It's Christmas time, have a bit of a break from the market, have a bit of a rest, a recharge, concentrate on the following year, and do it all again. Yippee! Moving on to the share allocation, not much has changed apart from the wallet pretty much going up still. Still going up. We haven't really been purchasing anything here. Well, that's the way it goes. We've got a lot of ground to cover since we're not doing consumer cyclical, which is probably a good thing, because with the market the way it is and everyone all a doom and gloom around the economy, probably retail and things that people are buying are probably going to be a bit tight. Yeah, so we'll probably maybe edge away from that sector. But good things take time, and it does take a long time to build some of these other sectors up, especially when you're chucking in $500 a week. And we've got, $87,000-ish, $87,500. $500 on one of these other sectors isn't going to make much of a dent on the share allocation. Time to show the dividend update, and we've got $455.53 that's been paid out in September. There's nothing more to come. At this stage, we've got $587.66 due to come out in October, which will beat last year's October mark. But unfortunately, according to this, we're down $170 odd on September, and we'll beat October by roughly just over $100. So we're kind of $70 down for both of those months. We'll just have to see the way it pans out, because maybe we can break even at least. We have been purchasing more shares that should be paying out in September, October through the year. So I'm a bit surprised that we haven't made as much money in dividends as we should have. But however, having said that, yeah, we've got $2,300 here. Chuck another $600 on there. We're pretty much up to $6,000 plus whatever we can get. Not $6,000, $3,000 plus whatever we can get from December and November, which I suggest might be roughly anywhere from $500 to $600. We should be at the end of the calendar year. We should be up to roughly about $3,800 for the year, which is not too bad. And if we look at a percentage of that, assuming that we're up to around the $90,000 mark by the end of the year, something like that, or getting close to it anyway, probably over the $90,000 mark, it's representing roughly a return of approximately 4% or so, possibly a little bit over that. Some of the tax has already been paid, because most of these dividends do have franking credits. They're not called franking credits in New Zealand. They're called, what are they called? Imputation credits, that's right. They're called franking credits in Australia, where, so you don't get double tax, the companies already prepay the tax, but it doesn't happen in all the cases, so just something to watch out for. And finally, we'll just have a quick look at the NZX charts, because the week has been pretty rotten. I mean, you can see here, the week here, everything's been going downhill there. Yeah, going downhill. It's a couple of weeks since the last episode, of course. Had a great day yesterday. I'm not quite sure why today's up, because that kind of doesn't really make sense, but we have lost money. I guess it really depends on what goes up and what companies you were invested in, because some days the market seems to go up but we seem to lose money, and other days the market does go down and we make money. But generally speaking, if the market goes up, we should make money. You can see here better on the fortnight. It has been drifting down for the entire couple of weeks, apart from the last couple of days. We're going to kind of ride off today since we have made a pretty massive loss. But overall, it has gone down and only made a slight recovery there. You can view it better on the month. We peaked around the middle of the month, roughly around the 13th or the 14th of September. The last couple of weeks, bad news, right? But it's coming back up, and yeah, I've got no control over it. We can see on the 6 monthly chart, yeah, it's doing okay. It's definitely gone up over the last year, and looking at the 10-year chart, it hasn't really moved post-COVID since pretty much 2021, after the novelty of COVID wore off and the market sort of pretty much did a second crash, if you like. So it hasn't reached those heady heights back then in 2021. That's why it's good to rely on the dividends, because you're always going to get paid out those dividends regardless. So if we just owned a whole bunch of stocks that were equivalent of that mark there, and we did nothing, and basically the stocks went up and down, pretty much guarantee if we did nothing for 3 years, we'd probably be in a worse off position. But since we do have dividends, we're at least getting paid something, and if we can make 4% out of it, and eventually the stocks will do their capital growth thing and they will go up like this eventually at some point. Could be 5 years away, it could be this year, who knows? We've got no idea when it's going to be, but we'll make money on the capital gains for these stocks as well. And just having a quick look at the NZX board for today, because here's the gainers, here's the equities. There was 36 gainers here. You can see some of these. A lot of these are companies that we haven't invested in. Some, we've got a few of them that we have. So these are the gainers here. We can actually do a filter sort on the NZX chart. You can see here the actual market here says, based on the NZX50, it went down 0.27%. Top 20 New Zealand companies just went under at 0.02%, and the NZX10, which is the top biggest, or the 10 biggest companies in New Zealand, went down over 1%. So I don't know where Turners fits in the scheme of that, because that is our biggest holding at the moment. We go into the decliners and scroll down to Turners, we can see a 2.2% loss there, which is pretty substantial. And another thing, if you do go into the NZX site, you can actually filter this as well. So you can see our Promissia Healthcare Limited. Don't invest in them because they went down 40% today, which is quite a lot. But looking at this, a volume of 10,000 possibly units, 30 cents a share, is it? $3,000 worth of stock traded. Can't be that big a company. It's got 15 million worth of capitalization. So a very small stock. If you're in the US, that's minute. Even probably some of these billion-dollar companies that we've got here, Fisher and Paykel Healthcare, might cause a blip on the New York Stock Exchange. But apart from that, probably nothing else would. Maybe, well, ANZ Bank certainly would, but that's pretty much predominantly because it's an Australian company. Yeah, so there we go. So check out the NZX.com website, and you can do some more analysis on your stocks if you're purchasing New Zealand stocks. And that about wraps it up for another episode of Road to 100K. Thanks for sticking around. Like, subscribe, leave a comment down below. We'll catch you later. See ya.